Matt Manson joins us today. He is the president and CEO of Radisson Mining Resources. We'll be talking about his project and also the outlook for the metals, factoring in some very important news that came out recently. Welcome to the show, Matt. Good to host you.
Thanks, David. Happy to be here.
We're going to talk about Radisson Mining and latest developments and the deposits that we can look forward to as investors. But first, some news coming out of China today on the 24th of September. I'm just going to share my screen and take a look at this Reuters article here. So China's central bank unveils the most aggressive stimulus package since the pandemic. Central bank on Tuesday unveiled its biggest stimulus since the pandemic to pull the economy out of its deflationary funk and back towards the government's growth target. Analysts warn more fiscal help was vital to these goals. Another Reuters article, the indexes initially trimmed gains after a report from the conference board revealed an unexpected decline in U.S. consumer confidence. Today's action is predominantly about what happens overnight with the policy concerns from China. Now, what happens with mining is interesting. So that's feeding into parts of the U.S. market where you see some China-sensitive, more cyclical industries like metals and mining materials sectors outperforming, just to name a few stocks from this article. The Dow Jones rose 83 points. And a lot of companies, including Freeport-McMoRan, Southern Copper, are rising 7.7%, 7.9%. Copper and lithium up today. Base metals up. Gold is also up. I'm not sure if it's reacting to this news or something else, but the metals are having a great day. So just general question on the outlook for metals. What do you think this China stimulus is going to do for the commodities market?
Well, I think there's been a bit of a question mark over the metals generally in the last few weeks, and gold has been outperforming, I think, compared to them. And this is certainly a shot in the arm for commodities. And there's been, I think, there's been a better feeling about commodities more recently. So welcome news, I think, if you're in the copper business for sure. And in the gold business here, we're in a kind of a bit of an isolated bubble from some of those macro trends. I think we're more oriented towards the Fed in the US and what's happening there, and that type of dynamic, right? But I mean, gold's over 2,600 now, and it's maintained that price for some time now. So couldn't be happier about that for sure.
What do you think gold was reacting to all year? Or let's just take the last 3 months.
Interest rates, inflation, U.S. economy. I mean, it's all of that, right? And I kind of enjoy being the CEO of a gold mining company, gold development company, because all of my investors have already established a view on the gold market and the fundamentals of gold price, and they're all generally very positive about it going forward, and that's why they're investing in gold stocks. I see very much as my role to be presenting the investment opportunity for people who have already established a positive view about it. But I think, yeah, for the last 3 to 6 months, it's all been about interest rates and the Fed, right? And I think the continuing, cutting of interest rates and what that does to the gold investment environment.
Let's talk about Radisson Mining Resources. So it's ticker RDS on the TSXV. Let me flip over to my screen one more time. Matt, this is the ticker. In the last couple of weeks, it's up about, well, a lot. So yeah. What happened there?
Well, I joined July 1st, and I'm not going to, say it's all about me joining, and that's not why I'm saying that. But when I came in July 1st, and there was a bit of a remaking of the board of directors also at Radisson, new people have joined. And I think collectively what we're interested in doing with Radisson is communicating that after years of exploration of this project, this is the O'Brien project in the Abitibi of Quebec, was a mine up until the late 50s, famous for being one of Quebec's highest grade gold mines back in the day, produced about 500,000 ounces at half an ounce per ton average grade. The company's been exploring this deposit for many years, and there's now quite a considerable new resource here, over 1 million ounces at double-digit grades, the characteristic high grades of the original project. And so this new team that have come in, including myself, new board, we are communicating that the project has arrived and can now go, I think, to the next level. We can start contemplating a development direction here. And specifically, that run-up in the stock followed our announcement on September 9th that we had a memorandum of understanding with one of the 4 companies that are running one of the 5 mills around us. This is IAM Gold, and the Doyen mill attached to the Westwood mine, the MOU was for a technical collaboration that would study the viability of our ore going eventually to that mill. And this was consistent with our stated objective of marrying up our project to somebody else's mill, so we're not building our own. And IAMGOLD's stated objective of finding additional ore supply for that location. So I think the market woke up a little bit that this company that they had maybe gotten used to having around, but just drilling and exploring and not doing much more than that, it is now on the radar and has the capacity perhaps to go to that next stage. So that was very well received. We kind of doubled down on that good news this morning because we had some drill results that were quite hot and which were telling the story of resource growth at depth. So we're kind of firing in both cylinders here. We've got a direction established that we want to go down towards the development of the project, and we were able to give guidance on the type of development we're talking about. Not building our own mill, not building our own tailings facility, but getting together with somebody else on that, and also the resource growth story that many of our investors want to hear about as well. So it's been a good couple of weeks for us, and that explains, I think, the share price performance.
Well, 77% increase in just over a week and a half. Usually we see that when a company is going through an M&A and there's a takeout event being announced. Now, I know you said that's not what's happening right now, but do you think that's what the market is pricing in?
Yeah, maybe. What I'd argue was that we were trading at a very depressed valuation. We were trading with a 50 million market cap, with 1 million ounces in the ground. That's $50 an ounce, right? And that's basically been the discovery cost for this project over the last few years. So I'd argue that was a bit of a spring-loaded kind of factor there, and maybe we're now trading at levels that we should have been trading at before, right? And we've kind of unlocked the path to that by getting some guidance that there's something different happening, and there's some, this is a different story and it's moving on to the next stage. I can't speculate on what people are thinking about in terms of M&A. The MOU we have with IAMGOLD is actually silent to any commercial arrangement between the parties. It's just a technical collaboration. It's non-binding. There's no guarantee it will actually lead to anything in particular. We're doing the work to see if something is viable, but it's also non-exclusive. And there are, as I said, 5 mills and 4 companies, and we're right in the middle. I think people who have heard me talk about Radisson over the last few weeks and months have heard me talk about the fact that there's head frames on the horizon here, right? Which is literally true, right? And so be crazy for us to think about building our own standalone project here. Obviously, the way forward for us is to look to one of these other companies and mills and marry up in some way, and that does produce a little bit of interest and a little bit of tension, I guess, which might be reflecting some of the interest. But look, this is a quality asset, quality location. We're putting in quality people, and I think the market is rewarding us for that.
Okay, let's flip over to my screen one more time and take a look at the stock. So I'm going to compare this to the GDXJ index. Over the last 5 years, RDS has slightly outperformed the GDXJ, especially in light of the last week's activities in the stock price. Tell us a little bit about the deposit then. Tell us a little bit about the project, and give us some insight as to why ultimately the stock has performed just as well, if not slightly better than the overall index.
So we're right smack in the middle of the heart of gold mining in Canada, the Abitibi. This belt of richly endowed gold mineralization with spotted with mines. So we're immediately in between Rouyn-Noranda in the west, Val-d'Or in the east. Everybody drives home at the end of the day here. We're right on the highway, right on the power line. And the O'Brien mine ran up, as I said, up into the late 50s, just outside the town of Cadillac. Underground mine, narrow mineralization, very high grades. And that's typical of deposits along the Cadillac Larder Lake Break, which is one of the big geological sutures which defines all this gold endowment in the Abitibi. So classic Abitibi gold mineralization, high grades, narrow, lots of veins, and these lend themselves to quite high margin prolific mines. We've drilled down, as of this morning, we've drilled down to 1,100 meters, where we're hitting, the drill result we got was an ounce of gold per ton, almost 27 grams over 6 meters of core length. That is a very rich hit. That was chasing a similarly rich hit which we had a few years ago, 170 meters above. So we're down at 1,100 meters. Most of the resources in the top 600 meters of this deposit, and we think an exploration horizon is down to 2 kilometers here. So narrow, high grade. It'll be an underground mine. Producing probably in the 80 to 100,000 ounces a year range, and potentially for quite a long mine life, with lots of exploration ahead of us. And we're benefited from having the old mine sitting here beside us, with a shaft down to 1 kilometer already existing there. That was from the old mine. All the geological understanding from the old mine to help us guide the exploration for the new resources. And again, right off the highway, power line right here. Blessed by location, right? So that's the project in a nutshell. Again, it's been a story which has been around for a while. The company's been drilling here for many years. Just focus on the exploration, moving the ball down the road, getting the deposit progressively bigger with each campaign of drilling. But now there's a considerable amount of drilling, 260,000 meters, another 35,000 meters coming this year. 1 million ounces plus at 10 gram average grade in the indicated resource. All the attributes of the original mine are coming through in the new exploration. And so that's, I think, what people are waking up to here. And, with $2,600 gold in this location with those grades, with a strategy of not having to take on the big onerous capex and risk, of building a standalone project, trying to do it perhaps a more sensible and a more rational way, which is just marrying up with somebody else. I think that's hitting the sweet spot in this investment market for gold stocks, and people are waking up, I think, perhaps to the story.
Before we talk about your future plans, I want to visit the region itself. So you brought up Abitibi several times. This is on a company presentation from Radisson Mining. It's located in the Abitibi Greenstone Belt, hosting 100 million plus ounces of gold between Ontario and Quebec. Give us some history, please, of this area and why it's geographically and geologically important.
What you mentioned, greenstone belts. These are Archean rocks. This is Archean greenstone belt. So this is a sequence of large crustal sutures that go down quite deep. In the geological world, we call the gold here mesothermal gold, structurally hosted mesothermal gold. So that's why it's so prolific. This is gold mineralization that's very deeply rooted in the Earth's crust. These are very old rocks. And there's a huge variety of different types of mineralogical settings here as well. You've got things like Canadian Malartic, one of the biggest gold mines in Canada, which is a lower grade but very large tonnage deposit of gold in certain types of rocks. You've got the La Ronde mine, which is a zinc and base metal deposit with gold, or gold with zinc, depending how you want to see that, but a prolifically rich deposit that's now down at 3.5 kilometers deep. You go into the Ontario side and you've got things like Kidd Creek. You got all the VMS deposits of the Hemlo, of the Noranda camp, around Rouyn-Noranda. So incredibly diverse metallogeny here. The practical implication of that is you walk out the door. I'm sitting in our camp. Our deposit is right outside. These are our offices here at the project site. You walk out and you're walking into the bush a few hundred meters, and you're finding shafts that people have put down over the years to do their own exploration, right? And that's how prolifically well endowed the rocks in this camp are for gold mineralization. So again, our exploration is proving that up, I think, with the O'Brien project, the new resources, the grades we're seeing. But there are some places in the world that are uniquely blessed, right, for mineralization, and this is one of the famous ones, right? What we illustrate with this graphic is all of the mills and the mines, this sense of head frames on the horizon, everything that's around us. The red hatched areas are where you've got existing or historical hub and spoke type arrangements, where you've got perhaps an old mill that's been going for decades in some cases. You don't want to shut it down. It's working well. You're always interested in keeping it going and finding successive sources of ore to go to that mill and keep on going. And there's lots of potential sources. So Sigma Lamaque with El Dorado is one historical kind of multi-deposit single mill arrangement. You got the LaRonde mill with the LaRonde mine, the Lapa deposit to the east of us went there. That's Agnico Eagle, all of that. You got Doyen Westwood, originally built by Cambior, now IM Gold. Again, a mill that's taken successive sources of ore through it. We're just proposing to be the next source of ore into one of these types of arrangements. And where we're focused with this MOU that I mentioned is the Doyen mill just to the west. It was 21 kilometers away down the highway, right? Very close, 15 minutes drive. That's how close everything is here.
Okay. You're close to a bunch of bigger miners, IM Gold being one of them, Agnico Eagle. So let's talk about this MOU with IM Gold in more detail here. This is a press release issued by the company recently. The MOU facilitates the exchange of technical data between Radisson and IM Gold regarding metallurgy, flow sheet configuration, potential mill modifications, and future processing and tailings disposal capacity. So why was this agreement necessary? What was your how does this fit into your larger strategy here?
Well, I think we've been talking with IM Gold for a little while. Again, they've said publicly that they're interested in finding more ore for the Doyen mill. It has a 3,000 ton a day capacity. The Westwood mine is doing about 1,000 tons into it. It's currently fully occupied with a couple of satellite deposits, but next year that runs out. So they're going to have a big opening up of capacity in that mill. So they've said publicly they want to cure that. You know, we've said we want to find a mill. So there was a very good fit there. Why we're doing all this work is that ore is not plug and play with mills, right? You know, these are all older mills that have been modified over the years successfully to take different types of metallurgy, and flow sheet modifications are required, and we have to do that work. The metallurgy of our ore is different from the ore that's currently going through there. How do we treat it? How do we have it going in parallel with other ore? What is the tailings deposition strategy, tailings capacity? How do we do that? None of this is trivial work, right? So we don't just wake up in the morning and say, well, you know, this mill is going to take the ore. You have to do the work. And so I think we're putting our best foot forward here quite professionally. We've signed this MOU with IM Gold. Again, silent to any commercial terms. We're not talking about any specific relationship here by which this is going to be achieved commercially. It's just a technical collaboration. But once established, the reason we wanted to talk about this publicly, which is a question we get, is that we wanted to give guidance to our shareholders where we were going, what we were doing, right? We're going to be doing metallurgical studies. And we're also, once we establish the viability of this direction, should we establish the viability of this direction, we want to bring out a preliminary economic assessment which shows what our mine can do and what the value of the project is. And that will further support the investment thesis for the company, something we've been unable to do without having the mill direction established, right? So there's reason for doing the technical work. There's reason for talking about it. I am Gold are very happy to talk about it because, again, this is consistent with what they're trying to achieve with that mill. They want to find sources for it. So very, very good kind of win-win so far here. And that work, you know, is starting up. And should take a few, weeks and months to complete. But at the end of that, hopefully we'll have established the viability of a mill for our ore. And I can't stress, David, I've built I've been involved in the building of 3 mines in my career, all much bigger projects than this. The Diavik mine, the Renard mine in Quebec, both diamond projects, and then the Valentine mine in Newfoundland, where I was the CEO of Marathon, recently acquired by Calibre Mining, and that's done very well. Calibre has done very well, and I think the rationale for that deal is now quite clear. So 3 mines I've been involved in, from greenfield to construction and everything in between. And what this is not that, right? This is a brownfield site with a well-established resource, and we intend to not build a mill, and we're not going to build a tailings facility. We're just going to focus on the mine, and the ore is going to go to an existing facility. And that means a much lower cost profile, potentially a higher margin project. We're not taking on a big financing structure to accommodate a big ticket spend. We're able to technically focus where the focus has to be. And it's a very streamlined operation constantly here in terms of permitting, social and environmental assessment. Because again, we're not just not building the mill and not building the tailings facility. We're on the highway here and everyone drives home at the end of the day. We're not building a camp either. We're not building major maintenance facilities because there are service providers in town. That's the benefit of being in the heart of the Abitibi. So, it's I think where modern mining is going, right? We're moving away from single asset, big project construction. That's also, I think, what the market wants to see. We're doing something, I think, that's clever and which is efficient and which is a win-win for everybody concerned.
This next question is something that a lot of investors have asked me as well as other companies that they're working with. So going back to your share price one more time, I'm going to replace the RDS with GDXJ just to illustrate the point here. Over the last 5 years, you can see that the gold price has outperformed the junior mining index. The same thing with the larger miners as well.
Yeah.
So
yeah, particularly bad for the GDXJ. Yeah.
People want to know why it is that gold has reached new all-time highs, but the index hasn't retraced its 2011 highs. And ultimately, what is the industry going to do to add shareholder value? You can take your company as an example if you like.
Well, so this is the number one question amongst gold company CEOs, whether
Sure.
big or small. It is the valuation gap,
Sure.
right? And when is the bullion story going to come into equities? Traditionally, it goes into the bigger names first, and then it filters down, through the food chain. So it's bad in the GDXJ. Yeah, you're right. It's also bad in the GDX, right? I don't think I can give you an answer to that. I mean, I think what will cause people to put their money into the gold equity story, which is traditionally higher risk but higher return, right? And I think the gold, there's lots of investment opportunities. There's lots of passive ways of having exposure to gold, right? That's part of the story. If you want to put your money with an active fund manager who is making selective decisions to put his clients' money into, managed gold equities, that's still a relatively small part of the investment universe, much smaller than it used to be, small part of the investment universe for money going into gold, right? So there's lots of other ways it can go in more passively. So I think until that changes, right, we're going to see this gap between valuation. But back in the day, it used to be, and I'm showing my age here a little bit. Back in the day, it used to be like a big discovery in the sector, right? It used to be, there'd be a big discovery, and fund managers in gold would be in two categories, whether or not they had their clients' money into the company with the big discovery or not, right? And the returns would be so divergent that you had to be in the junior stocks and the mid-cap companies to catch that wave of the next one. That's the dynamic used to be. It's less that now. There's been some big success stories over the last few years in terms of discovery. Great Bear was a big success, but that's less of a driving dynamic now, right? And I think the higher risk, higher return type investor has got a lot more of a universe to play in than just sort of junior mining stocks or gold stocks, right?
Can you maybe comment on some explanations or rumors that I've heard, which is that perhaps mining costs have gone up for both juniors for the exploration costs as well as the seniors for the production costs, which have contributed to the underperformance relative to gold. Is that true or not?
Oh, I know. I think in the last few quarters, there's been a genuine margin expansion amongst the gold producers. I mean, I think that's evident in the financial results that are now coming, and it's been the case for several quarters now. That's an important achievement, right?
If that's true, we have to point to the fact that the gold mining sector has been outperforming the gold price in the last couple of quarters.
Well, there you go. It might finally be changing, right? And I think that dynamic that used to be the prejudice about the gold business, right? You'd hear so many skeptics say, "Oh, you guys know how to lose our money," right? Because the gold price goes up, your costs go up, and you also move into lower grade parts of your ore body, and the margins stay the same, right?
Well, just to illustrate the point, over the last year, the GDX is up 33% versus gold's 29%. In the last 3 months, the GDX has really started to outperform, up 20% over gold's 14%. So yeah,
Right.
trends are changing.
Yeah.
Capital is flowing into the sector. How is it different now that gold is at $2,600? Are you using capital differently? Do you have a change in strategy? Has it affected your 5 year plan or long term vision at all?
On a very technical level, yes. So, the last time we defined the mineral resource in our project, we used $1,600 gold and a 4.5 gram bottom cutoff for the definition of what was resource and what wasn't resource. So now we will, and not everybody goes through this process. You have to assign a certain economic cutoff. But we use a higher, next time we do that exercise, we use a higher gold price, right? We use 1,900 or 2,000. That's what everybody else is using. The cutoff will go down because of that. And we'll end up having many more ounces in the deposit at a somewhat lower grade, right? Now you have to be, as I said, so as not to destroy your margins here. You've got to be disciplined around that, right? And most people, I think, are more and more disciplined about how exactly they do that. So nobody uses spot. Everybody uses a discounted price of spot to do that adjustment. But that's a very technical response to a higher gold price environment, right? I think from a philosophical point of view, right? I mean, we are feeling a better market, right? We are feeling more investment appetite, and that makes you a little bit, I want to say braver, but a little bit more confident to make some longer term investment decisions around your business, right? Because you know that you're into maybe a new era here of margin, of commodity price, of investment appetite, right? So, and that's within the bounds of discipline as to how you're going to manage things. Boards and management teams begin to get a little bit more optimistic about what they want to be doing with their assets, right? But listen, I mean, we're in the mining business here. We're in the commodity business. It's cyclical, right? Many of us have lived through multiple cycles. Caution is always required in these things. We, in particular, at Radisson, enjoy the fact that we have such a high grade deposit that if you apply spot gold prices to our resource grades and work out what that is in terms of dollars per ton of rock value, it's spectacular. Right. So, that lets us all sleep well at night at Radisson Mining Resources, let me tell you. Right. Long may this gold market continue.
Well, can you comment on what the industry is doing both from a junior and senior perspective this time versus 10, 12 years ago? Well, I guess it's 13 years ago in 2011 when gold hit its then all-time high, which by the way, in nominal terms is not as high as it is now. Any significant changes now versus then?
Yeah, look, I think back then there was a big, 15 years ago, from an explorationist point of view, a lot of companies went towards lower grade deposits. So, that's when, for example, Canadian Malartic was developed, where it was which is down the road from us, a great mine, tens of millions of ounces, but low grade, right, less than gram per ton on a very big scale, and I think back then the thesis was, and it had Malartic is a mining town. There had been mines there before, historically, mining higher grade things. And it was reimagined by the Cisco guys from an exploration point of view as a bigger resource to be mined on a bigger scale. And I think you saw that, especially in the Canadian landscape, you saw that trend. You saw people reimagining these older mines into these much bigger deposits at lower grades because of the gold price. So you had Detour developed, now Canada's biggest gold mine, and you had Malartic developed as well in Quebec. So I don't feel the same rush to scale, right, that we had then, right? Those two projects worked out very well, but there's a lot of other deposits around there that were kind of found and developed at that time that are not quite as big and don't work quite as well at those grades. Even in the current gold price environment, I think there is still very much a focus on quality, right? Despite the gold price going up and protecting margins, right? I think those are the lessons that have been learned. The last few quarters have shown that, I think, right? How the gold miners have responded to this gold price environment. So I think that's all to the credit of the gold business, really.
Is $2,600 gold enough to incentivize the larger companies to engage in more M&A now?
Yeah, maybe. I mean, the pundits are saying that, right? The people who are issuing commentary coming out of Denver and Beaver Creek and some of the big investment conferences that we're in the season of investment conferences now. So certainly some of those bigger companies are making a lot of money, right? There's a lot of cash being generated by at these gold prices, right? And we've seen Goldfields with an all-cash purchase of a Cisco recently, and again in the Quebec kind of context, in the Canadian context. I've come out of one of those, Caliber buying Marathon, and that was an all-paper deal. It was a 1+1 = 5 thesis, which is proven to be a good thesis, frankly. Well supported by the market, I think that. Yeah, I think let's see what happens. Let's see what happens. I think there's we might be seeing a new appetite for that type of for growth again through M&A from some of the larger companies.
Well, no doubt investors have been on your back about controlling costs. That's what investors do. So if you had to just identify one or two things that could be lowered in terms of cost, I'm not saying you should do that, but just if someone were to ask you to do it, what would that be and how would you do it?
On costs.
Yes, on costs.
Look, I think our particular response to that is to not take on in our business plan the big, expensive areas of cost risk, capital cost risk in the building of a mine. We don't want to build a new mill, which is an area of greatest man hours, person hours in the design and the construction, with the most number of trades having to integrate with a lot of coordination risk and technical risk in terms of recovery. So we don't want to take that on, which is a major source of cost risk, and we don't want to take on the earthworks associated with a tailings facility and the special social and environmental sensitivity around having a new tailings facility, which can lend itself to lengthy permitting programs, which again is a cost risk. So on a day-to-day business, like I think everybody in the mining business actually went through a step change in cost, and it was the first half of 22, right? That was when, first half of 21 through 21, and kind of finishing, in 2022. That was when inflation kind of hit the world after COVID. But in the mining business, that was like this, right? It was a square jump up, right? And literally, you could not, if you were building a project during that period, and I was, we were trying to actually establish a budget for a construction. You could not get terms from suppliers that would be beyond 2 weeks. Right, they wouldn't guarantee the price of a pump or a crane or a cube of concrete beyond 2 weeks, because they usually you'd get some, like 60 or 90-day terms, which allow you to build a budget and then make a decision. So that era in mining, cost inflation lasted for about 12 to 14 months, in my estimation. Yeah. And then things settled down a little bit. And it's been settled for some time now, I think.
What's your outlook on costs overall? I mean, do you think there would be a certain line item just for your operations that may see significant changes due to macro environments? Obviously, a couple of years ago we had the pandemic that hit everybody. Any such risk that you're seeing now?
My answer to that, it never changes. It's people. It's shortage of people. We have a systemic shortage of qualified technical people in the mining industry, and it's everywhere from geologists to miners to mine finance to environmental scientists to planners to especially maintenance equipment, heavy equipment mechanics. My goodness, they're worth their weight in gold, literally. That is a systemic area of cost inflation in our business, and which never goes away, right? It's a good career to be in if you're a young person, studying. Let me tell you, right? So again, maybe a little bit better that situation than it was. But that's a systemic area of challenge in the mining business. I think globally, that one.
What's your outlook on the average mine life of a project? I know this varies per jurisdiction and the geology and so forth, but comparing it now to maybe a couple of decades ago, I've heard that because of the fact that it's harder to extract minerals now, perhaps the mine life could be affected. What's your outlook here?
I, you
Is
know,
there a difference
um,
between now and before?
well, I think it's getting longer and longer to bring a new project to production, right? I mean, it's a 10 to 12 year germination period from discovery through to having the first bag or bar or whatever you're producing, right? And that's getting longer and longer. So the prize, the resource life, the size of the resource needs to be commensurately bigger and bigger the longer and longer it takes you to, and you're living off of risk capital that whole period. And I give a speech to the teams I work with that, it takes so long to bring a project to construction that everything will change between the beginning and
So,
the end of
so,
that
so companies
process.
are skipping the smaller deposits altogether, you think?
Well, no, I think that's just general. So, the rule
Okay,
of thumb is 10 to 12 years minimum is what you want to
I
get
see.
going. We contemplate a lower bar than that because, again, we're contemplating something which is a little bit more streamlined, not spending the capital to build a mill and a tailings facility, but going to an existing mill. So, we feel we're probably looking at 8 to 9 years right now with resource upside, and that's crossed the threshold where that works in our context because we're planning to do something else, right? If you got something which is 20 or 30 years, you're in a different category again, right? But I think it's that. I think that the dynamic here in time and mine life and size is driven more and more by the time it takes you to bring something into production, right? And what the thing has to be to merit all of that time and effort.
Let's finish off then on good segue on your long-term outlook for your own company, and maybe give us a sense of. We talked about the new MOU with IM Gold. We talked about some recent drill results. What is your longer-term plan? 2-year plan, 5-year plan? Where is the company headed next?
Well, I think we're now sort of well established publicly with two work streams basically. There's the what I call the day job, which is what the company's been involved in for the last few years, which is drilling, hitting gold, growing the resource. The drill result we put out this morning is so important because it's stepping us down into an unexplored part of our deposit, which is wide open and it's giving us super high grades over thick distances. So very exciting about that. And so that is a significant work stream. But then we've also got this work stream going on around the mill at Doyen with IM Gold. So there's metallurgical work going on, there's design work going on, there's going to be interface between our team and the IM Gold team. And then when that is done, subject to its successful outcome, we'll be able to bring out a preliminary economic assessment, which will give essentially the 5-year plan. It'll show what this project can do in terms of a mine. It'll give guidance on timeline for permitting and environmental assessment, which again, we think is going to be a somewhat streamlined thing for us. Brownfield site, blessed by infrastructure, and we don't contemplate building the bigger, more challenging parts of a mine. So I think that's kind of where we're going, right? And I think hopefully within the next 3 to 6 months, let's say by the end of the first quarter in 2025, I think we'll have a much clearer direction for the O'Brien project in Radisson and where we're going based upon that technical work that will have been completed by that stage.
All right, Matt, I appreciate you coming on the show and educating us on the mining sector and updating us. Where can we learn more about Radisson Mining and stay up to date on your company?
RadissonMining.com is the first place to go. LinkedIn is an important source of information for us. Various YouTube channels that we are involved in, and Twitter accounts, personal and corporate Twitter accounts as well. There's a wide range of information sources for Radisson at this stage.
Okay, we'll put some of the links in the description down below, so make sure to follow them there. Thank you very much, Matt. We'll speak again soon.
Thanks, David.
Thank you for watching. Don't forget to like and subscribe.